and welcome. You're watching Business Today TV. I'm Sakshi Patra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Also with what are the key expectations and the kind of advice that investors and all the experts are giving as far as the earnings are concerned. How are they analyzing the key numbers that are coming about and how are these particular stocks also reacting? We'll focus on all of that. ITC, SBI, the two big numbers that have come about. But right now, the markets look softer, about 99 points of a cut for the Sensex. It's trading at 61,455. The Nifty also hovering 50 points lower in trade at 18,134. Let's look at the broader markets and see how is the picture looking like over there too. In case we are going to be this softness, this could be the third consecutive day when the markets could shut shop in the red. Looking at the broader markets, both of the mid cap and the small cap 100 indices have now slipped into the red. In fact, they are underperforming the benchmarks at this point, with the mid cap seeing a sharper cut of half odd %. In terms of the other sectors in trade today, when we talk about the Nifty Bank, that's the index that's still holding up into the green, with gains coming in on the financial services pack and on the private banks. But FMCG, that's the index that you should watch out for. 1% down in trade. Defensive has in fact come under pressure. Even IT stocks that were earlier trading in the green zone have come down about 0.2% odd in trade today. Pharma stocks declining. The autos have slipped to the day's low, about 0.9% of a cut for that one as well. Realty stocks, remember, were down by over 2% in the morning trade. Let's see how that has also fared. Pharma stocks now down by 1.2%. So the markets are increasingly coming under pressure. The Nifty Realty at the day's low at 2.5% as well. Most of the indices have actually seen more slippages coming in as far as the market is concerned, barring, say, financial services and the Nifty Bank as a whole. Private banks, rest all of the sectors in fact have actually slipped into the red zone. Talk about metals, pharma, IT, FMCG, all are down in trade as well. Let's look at some of the top losers that are creating pressure as far as the markets are concerned right now. Divis Laboratories, definitely the top loser, 3.4% of a cut for that one. Adani Ports, 2.2% down. SBI, post the earnings, is seeing a cut of 2% or 574 is the level at which it is trading at. ITC, right after the earnings, that's the stock that you should watch out for. 420 is the current level, 1.7% down for this one as well. Eicher Motors, Dr. Reddy's, the other laggards at this point in time. The time now to welcome our guest on the show. Joining in with me is Mr. Anil Rego, founder and fund manager at Right Horizons. Anil, welcome to the show and thank you so much for taking the time out for this discussion. Your own thoughts? The markets have increasingly turned volatile and somewhat under pressure this week. How do you read this current correction? Is this likely to deepen further, or are we going to see some bounce in the markets again?
Yes, so market, of course, came back from the March lows and amidst a lot of uncertainty, especially, coming out from the US, and there was expectation of a, wider banking crisis, etc. So I think from there, it has sort of come up and done reasonably well, this financial year. So I think corrections like these are not surprising, okay, and markets take a breather. In our view, combination of factors make us reasonably positive on markets for this financial year. Combination of, we believe good earnings growth will come in. We also think that somewhere, interest rates also should start tapering off. We're seeing yields already sort of, flatten. And so probably you'll see effects there on interest rates, and hopefully, continued pause and possibly lowering of interest rates as well. Of course, what is also helping is inflation also has come some bit under control, especially if you see the WPI index has also, been negative and stuff. So from there, one thinks that this is just a correction, and I think it's an opportunity for investors to sort of come in and invest.
Okay, let's actually focus on two numbers that have come about. ITC has just come out with its earnings. Since it's a big one, I wanted to take your view as well. Some of the key data points that we've just got from the earnings is that the profits have actually surged 23% on a year-on-year basis to over 5,175 crore rupees. The revenues have risen about 7% odd as well, and they've come in at 19,058 crore rupees. So from a year ago period, there is a jump of 7%. ITC board has declared a final dividend of 6.75 rupees per equity share and a special dividend of 2.75 rupees per equity share as well. I wanted to take your first thoughts, Anil, as to how do you read through the numbers of ITC as of now? What were your key expectations here, and have they met your own expectations?
Yes, sure. First of all, we don't hold the stock, okay, so on a portfolio, and that's a disclosure. From the overall consumer business, we definitely think this should see some bit of tailwinds, especially with inflation sort of coming down in, and definitely ITC results have been in line uh, with our expectations, and I think it's been a bit of a reasonable turnaround and re-rating of the stock that we've
Yes.
seen over the years, right? So, and I think that stability and continued performance, along with the consumer businesses, in my view, will also start fighting for it.
Okay. You're right over there that the stock has had a good run when we talk about last 1.5 years, and that's after a long haul of underperformance. Lots of issues that ITC has really looked at and perhaps overcome a lot of challenges as well. Last 1.5 years, we've also seen the stock outperform widely, the Nifty and the Sensex as well. In fact, it has been one of the top performers of the Nifty, just second to Tata Motors, if we talk about this year as well. After this dream run, do you think, despite these kind of numbers in line with expectations, is everything priced in with the kind of move that we've already seen in the stock? What is your own thinking?
So I wouldn't want to give a buy or sell call on the stock per se, because
Sure.
one does not do that. But I think, yeah, so wherever there has been a good run up, it's time to sort of go back and look at the numbers. Is the re-rating already done or not? And from that standpoint, I think yes, one has to be a little more cautious than what one was earlier, because earlier it was a steal. Okay, valuations were attractive, but now not necessarily so. So the
Got that.
question for you is there some other stock which you would like to look at, which sort of has better growth potential as compared to ITC?
So FMCG space as a whole, how do you look at currently? We're looking at some concerns being raised as far as El Nino is concerned, on the monsoons getting delayed this time around as well, and that would put question on the rural incomes and the consumption patterns as well. How does one really approach the FMCG pack then?
Yeah, India has been a reasonably consumer market, and while there are some of the negatives, there are also the plus sides to things. I think the Karnataka elections and would mean that I think BJP will be a little more, looking to do a few measures, especially rural consumption and stuff like that. So I wouldn't be surprised if there is, so there are both sides to it. But I think consumer to me in India is a secular, market. Okay, except when one finds that say valuations are really high, then that time one sort of stays out. But definitely there are various pockets and opportunities that I see, across stocks and say, especially in the sector as well.
Right. Let's also shift focus from FMCG to the banking space now. I do remember speaking to a whole host of analysts right from the beginning of 2023, or perhaps the last quarter of 2022 as well. Well, the sentiments regarding the banking and the financial space started to turn positive after an underperformance during the COVID era. Everybody thought that this is the time when the banking will actually take the lead, and that's what we have seen play out. PSU's banks have been in a sweet spot as well, and overall the banking industry, in terms of fundamentals also, they've performed on the earnings front. Today we've got the SBI numbers that's again posted an 83% jump in the net profit as well. The net profit has come in at 16,694 crores. Now this is the highest profit that has been posted by a bank in India. SBI, of course, has been the poster boy of the PSU banks, and of course, it is the largest bank in India. Your own sense of the kind of earnings that have come about, NIIs, it has been a beat on a lot of segments as well when we talk about the earnings, whether it is NII or the profitability. Even the margins and the asset quality has also improved quite sharply. Your own thoughts?
Yeah, so again, my disclosure first, we hold SBI in various portfolios of ours. Of course, I have been reasonably bullish on the whole PSU pack, and especially on the financial institutions and banking sector. So SBI definitely is one of them, and this is broadly what our thought process was, that we will see a relative re-rating between the private sector and the PSU banks because of one key reason, which is there were a lot of concern on the NPAs, right? And in the past of the PSUs, and that sort of now you can see from these results as well. There's further sort of improvement in the NPA ratio that SBI has sort of come out with. So that's something which will, in our view, result in a bit of a re-rating. And I think the results definitely have been very good. I think beaten street estimates. NI is good as well, like you mentioned. And, of course, even the provisions, have been halved almost.
Yes.
So there has been, a really good and positive result from SBI. And I think probably there's some bit of, further improvements, I think, as we go forward.
Got that. Anil, what according to you are you really looking at bullishly at this point in time in the current market scenario? Any particular themes that you believe for a long-term investor, this is the time that one should start increasing focus on, and one should start including some more stocks from particular theme in the basket now?
Yeah, so in recent times, one has been talking about the PSUs and PSU banks, like I just mentioned. Okay, the other sector, which I think is relatively more stable and will probably continue there, is the auto side. Okay, there are some areas around, say, building materials, manufacturing. I think some bit of India-focused themes, in our view, will do well at this point of time, and those are ones which I think investors should look at adding, especially look at quality stocks which have done well, and if corrections are there, then just take opportunity of that and go and invest in some of those.
All right. Well, thank you so much, Anil, for speaking to us on Business Today TV and sharing insights on various sectors and the themes that investors should be watching out for. These tips should be looked at as an opportunity to get into some strong fundamental names and some themes that Anil just suggested he is positive on. So perhaps you as investors and viewers could definitely keep those themes and stocks on your radar as well. As we speak, the market's drifting lower, 107 points cut for the Sensex, 61,448. The Nifty also trading about 50 points lower in trade at 18,134. Will the markets end in the red? Looks likely. We're just about 15 minutes away from the closing of the day, and this could be the third consecutive session when we could see the markets under pressure. Will we see a sharp bounce back in tomorrow's trading session is the question. We'll keep an eye on the markets and everything that can move the markets for you as well. So do stay tuned with us on Business Today TV.
Privatization of banks seems to be off the table for now. Finance Ministry sources have told Business Today TV that the centre has no plans to pursue divestment of public sector enterprise in the run-up to the next general election in April to May 2024. However, the Finance Ministry is hopeful that the IDBI bank sale will go through in the current fiscal year. For more on this, let's go across to Karishma Sudani. Karishma, what about